So just talking about the 25,000, maybe 28,000 target, let's do some technical analysis work here. So one of the reasons why I thought that this was a short-term bottom was because of a couple factors. Number one, the obvious one is that we pierced the 2017 highs, right? So just naturally, that's going to be a massive level where people are saying, okay, maybe this is the low in the charts. But more importantly, you see this down candle here, and then look at how we broke below and we closed below that 2017 high, but very, very quickly we reversed right back up. That's what we call a bullish reversal candle. So in technical analysis, that's a positive. Now you're just going sideways here. And one of the things I'm paying attention to is the stock market, because it also can be a leading indicator of risk on. So if you think about the risk levels, people will say to you, okay, gold is the least risky, then let's just skip over some assets. But then you get to the stock market, the S&P stocks are kind of the next level. Then tech stocks are the next level of risk. And then Bitcoin is like the highest level of risk, right? I mean, when you see 80, 85% corrections in bear market, that's high risk. So we've seen now the stock market starting to catch a bid. Assuming that holds, it's telling us that people are coming back to risk. At some point, they will finally take a stab and say, okay, we've made money in the NASDAQ. Now is the turn to make money in crypto. And I think that's where you get this push up. So, now you have a majority, and this is kind of crazy, but a majority of holders, I think something like 70% of Bitcoin holders are now underwater significantly. So again, that kind of, for them, it's obviously feeling pretty risky at this point. Even though, yes, I mean, Bitcoin in 2009 was pennies. Versus where it currently sits. So it's been an incredible mover. Yeah, so I think that the 4-year cycle has proved itself once again in that, 2009 creation, 2013 highs, 2017, now 2021 was the last high. So as of now, all we have as technical, traders is to say that, okay, 4 years is what the cycle is. We should bottom out. Usually Bitcoin past cycles has bottomed out in that first year, that 12-month period. And then it kind of has a choppy period for about 6 months afterwards, before the next bull run starts. So, we're not at a year yet. So it still tells you that there could be some more downside. And then even after a year, you have to figure 6 months of choppiness before that next bull run. Now, my only fear, and this is kind of the unknown, and listen, no one knows this, is that this is the first period of Bitcoin where the Fed is aggressively tightening, and you're seeing this kind of, inflationary pressure forcing them to tighten and keeping them from printing at this point. Does that mean that the bear market in cryptocurrencies will last longer? It might. And again, and I wish I knew the answer to that. All we can go by is kind of past cycles, which are not necessarily totally applicable. But I will say this. So wherever Bitcoin bottoms out, whether it's 17.5 where it was, or 12 or 10 or 5, or who knows where, I do think the next bull run will be the big one. And I know that sounds crazy because we've already seen big runs in Bitcoin, but my guess is when the market starts recognizing that the Fed is going to kind of do this whack-a-mole with unemployment and then inflation and then unemployment and inflation back and forth, there's no good end to this. And that's where Bitcoin is going to be, that next big bull run that easily takes us north of 65 and maybe 100, even a 250 or 500,000 per coin. Now, again, I think by this point, a lot of the alts are gone. You probably have a standard kind of maybe 50 cryptos that are now surviving. The top couple will be the blue chips like an Apple or a Microsoft type play. Those would be Bitcoin and Ethereum. And then we'll have to see how it all plays out after that. But I do think the next run is going to be the run of mass adoption, where the public starts to recognize the end game for the US dollar and really for central banks around the world that are just doing this and repetitively printing every time we get into this mess. Now, partially to look at gold as well. I do like gold here as well. I think gold is kind of, it's the grandfather or the grandmother of safety assets, while cryptocurrency is the 13-year-old, being Bitcoin's only 13 years old. So you look at which one's stable. I mean, here you have gold, which has basically held its value in 2022 while Bitcoin's collapsed, the stock market's collapsed. And that's kind of the old wise player versus Bitcoin, which is just like all over the map collapsing because 13-year-olds are irrational, right? It's still an irrational market where people are still trying to figure out the true value. But I think if you get a couple good things in the crypto markets over the next couple years, like some positive regulation and then you start to see what I'm predicting in terms of the Federal Reserve and how things are going to be handled, that I do think you will get more and more mass adoption in crypto, and it will be an amazing asset going forward.
I think it's going to happen at a shocking speed. So 1974, we went from everything looks okay to the worst recession since World War II in 4 months. I'm thinking it's going to look similar because of the speed of the monetary tightening, the speed of the rise of prices. So I think we are going to have a very ugly few months, both economically and for markets. The question is what comes next? And that's the key point. If my base case comes into play, which is the Fed pivot, they stop raising rates. They already started suggesting maybe we'll pause in September. My guess is June will be the last hike. And we either go through a scenario like 2000, which was a typical old school recession where, equity markets, unwound excesses, the bear market was 18 months or so, and then the Fed keep cutting rates and eventually it stabilizes. But if we look at 2008, which was the next recession, as soon as the Fed used the Fed balance sheet, we pretty much stopped in its tracks. Happened really quite quick after they did that. They cut rates first, didn't really help because the banks had seized up. Then they used the balance sheet. Then they did it again in 2010, 12, 16, and then 18 was the Fed pivot, the Powell pivot, where they went from hiking to, oh my God, we need to cut. The economy cannot take higher rates because everybody's so in debt and everybody's so old. What choice do you give people? Do you say, well, you're going to get destroyed because of the supply chain issues, because of COVID and all of this, and your wages won't keep up, so we're going to destroy household net worth, and everything's levered. So all the borrowings against houses and all the borrowings against equities and all of the borrowings on top of borrowings, and you're going to let the collateral go down and blow the entire thing up? What you're trying to do here, what they're trying to do is reduce the debt via financial repression, which is you basically have inflation running slightly higher, so you have than interest rates. So what you want is to reduce the real value of the debt. So if you think back to your parents, how much they paid for a house and the mortgage they had, the mortgage seems laughable. It's because over time, inflation raised the value of the house and the debt doesn't get raised. So in the end, the debt is nothing. It makes the debt less valuable.
Right.
So it's okay if you're in debt, but if you're borrowing, if you're lending money, it becomes complicated. But anyway, the point being is you either have a fiscal stimulus, which is, let's say, the Republican view. We'll have a fiscal stimulus, cut taxes, and we'll put some spending. And what happens is that doesn't go to the people who are the worst off. So it's creating this issue of 1% versus 99, which everybody can see and nobody knows how to solve. The issue is actually the balance sheet, because all of the expensive assets keep going up because they keep printing money. The rich get richer. Yeah. But doing this blanket fiscal stimulus is hard because the rich get richer again. So I think people have thought, well, maybe we should just try and give it directly to the people who are most affected. Okay, fine. Those are the two choices, or you do nothing, which is too late because there's too much debt. So you can't let the system clear anymore. The old way would have been you let the system clear, it's all okay, you just have a recession, everyone stops borrowing as much money, blah, 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 blah. The world is 400% of GDP in debt. The world has never been this in debt in all economic history. Regardless of your philosophy, it's difficult to find other outcomes that kind of make some sense.